Good morning, welcome to the Fit to Flourish podcast. Let's talk wellness, finance, and growth. What's up, guys? It's Mr. Fit to Flourish, and welcome to this week's edition of Stocks and Coffee. So this is brought to you by First Team Investing, your boy, Mr. Fit to Flourish, and K5. So we put this together every week. We talk about this in the Discord, and I also post our Stocks and Coffee here on YouTube. To keep you, the viewer, informed on what to expect this upcoming week. And this is the week of Christmas. Santa Claus is coming to town, okay? So let's get right into it. Let's talk about what is going on in the markets. Let's talk some shmoney, all right? So we always start off with a quote. So welcome, our only limit is weakness of attention and poverty of imagination. So if you keep your attention on your goal, if you keep intention on the things that you desire and have that imagination of seeing yourself with these things and really keeping that attention, focus on that. Don't focus on the bad things or the negative stuff. Because whatever you focus on, that's where your energy is going to go, and that's the reality that you're going to create. So you want to focus attention, have your attention on getting those things, what it takes to get there, and then have the imagination to see yourself there. And I promise you, you will get there. All right. So we got the best team in the world. Best resources in the Discord. We have YouTube, educational tutorials. We look at charts every single night. We trade live every morning, and there's so much more to come. Okay, masterminds, et cetera, et cetera. We have master classes that we're currently doing. We're doing 8 weeks of master classes in the Discord. So we've had our shares class. We had our stocks master class. We have a setups class coming up this weekend, and then our options trading class, our complex strategies class, and then key levels as well. So good stuff. Anyways, we can review. So in our Discord, what did we do? We had NVIDIA calls go absolutely nuts. We had SPY puts, SPY calls. We had IWM puts, IWM calls as well. So these were pretty much calls and puts. We just kind of ran it back, just ran the fade back with these stocks here. And then Tesla calls early on in the week. A lot of volatility in the markets, so a lot of opportunity, okay? So in terms of earnings this week, so FedEx jumped 8% the next day after earnings. They had a beat on EPS and a pretty big beat on revenue. And they also mentioned breaking up FedEx into 2 divisions. So this would mean an IPO in about 18 months, which is pretty bullish here. So they're talking about separating their freight division, okay, their freight division. But yeah, so FedEx jumped up 8% the next day, and it's funny because it literally just came down the whole day. It was just coming down and closed the gap. So no, unchanged now. It's really unchanged. In terms of Nike beat on EPS and revenue, but the stock pretty much remained unchanged. It actually gapped down a little bit on the next day, but really remained unchanged. And the EPS declined 24% year over year. We talked about how Nike had some problems early on competing with other newer companies, things like Lululemon and some of these newer new age companies, because they switched their focus to like streetwear. There was a whole thing. But anyways, they have a new direction that they're going in, and they're really focusing on competing again. So in September and October, there were pretty weak sales, and they mentioned that in the call, but pretty weak sales. But in November, holiday events helped tremendously with physical and digital sales. Nike really ramped up their advertising and really locked in on, hey, let's make a ton of money during these Black Friday events, during this Thanksgiving, going into Christmas time. So they really capitalized on a lot of these holiday events to help with sales, causing a pretty big increase in revenue. When it comes to MU, so Wedbush actually thought MU was going to kill earnings. MU absolutely shat the bed, man. It was pretty bad. So they had a slight miss on revenue. They beat on EPS, but the stock tanked to September lows. So we have a key level that we were looking at, and it literally tapped that key level to the penny. So what happened? Poor forward guidance. So there's a falling demand in this is what they're saying. MU is saying that there's a falling demand in industrial and automotive in the automotive industries. And there's a lot of pressure on memory pricing, so chip pricing on PCs and in the phone industries. So really taking a beating there, and poor forward guidance moving forward. So not looking too good for MU, but MU, in my opinion, is still pretty underpriced. So I think it's a pretty good buy here at that $84 level. Not financial advice. All right. In terms of economic data, this week we saw that initial jobless claims actually came in lower than expected. So this is showing a strong labor market, which is what's holding up the markets really. So we're having this melt up that everyone's talking about, but I mean, we have a strong labor market, so people have money to spend. People have money to spend. So prior to recessions, claims typically will rise. So we'll see jobless claims start to rise, and that's not happening right now. So claims are actually falling in current trends. So a lot of people keep calling for this recession, and you're going to keep calling for it and missing out on this money, I swear. So, but anyways, we play it both ways. So the Fed lowered the benchmark rate to 25 basis points. So we saw a 25-point cut this week. Year over year growth with PCE. So PCE came in lower than expected this Friday, and we saw stocks absolutely freaking rip. Okay, so we had that tanky. So on Wednesday after FOMC, we saw a huge tank in the market, and really the reason is we already like the 25-point basis cut was priced in. Okay, so that's one thing. We shouldn't have tanked that much though. But the other thing is that the Fed is stating that next year they're only going to do a total of 2 cuts, or a total of 50-point cuts to bring us down to 3.9, and that's it. And then they want to kind of watch and see what's happening. So that's not bueno, no bueno for the markets. So it's going to keep rates higher for longer, and higher rates means that you're taking out, like when you think about rates, it's like rates overall. So if you're taking out a loan on a house or a loan on a car, you're paying a lot of money because of the rate to borrow the money. So if you have a lower rate, when they're lowering rates, it just frees up the amount of money that you have, and then people get into these risk on assets. So they get into crypto, you see Bitcoin start to fly and things like that. So that's why when they're like, oh, like, yeah, we're not cutting, people don't have extra money. So they panic, like, oh shit, let me chill out on investing in this risky assets like Bitcoin, crypto. So that's pretty much the gist of it. All right, getting into related news and buzz. So the S&P 500 started to curl over. Is this it? Or is this just a retracement? Yet to find out. We do have some bearish indicators here, but again, it's just a slight correction. So we saw just a move of negative 1.9%. So the S&P is down 1.99% this week, but it's up 24.3% year to date. So a lot of people just keep panicking. It's kind of annoying. People are like, is this it? Like, oh, are we done? Like, the market's cooked. Like just kind of like chill out, dude. Like it can't be green. It can't be green every day. Okay, the market can't be green every day. So just kind of chill out. Dollar cost average, buy dips. This is an overall bullish market still. So just like take advantage of that. Buy the dips. Stop panicking. So and leave me alone. All right. Anyways, Monday. Monday, Wedbush raised the price target for Tesla amid optimism for autonomous driving. So we saw a huge move to the upside on Tesla, and then Tesla hit that 480 level, and it was like, no sir. It started to come back to the downside, and then came all the way down to 429. I think there was actually a halt on Tesla during FOMC because it dropped like $40 in like 10 minutes. It was pretty ridiculous. But yeah, Tesla, it looks like it is coming back to the downside. So watching Tesla closely here, I think we might be coming down to that $400 psychological level before making a move back to the upside. It's just so volatile right now, Tesla is. So be careful there. All right. The NASDAQ was rebalanced. So we talked about this last week. So Axon, MSTR, and PLTR were added and then dropped were SMCI, mRNA, and ILMN. So after this drop, SMCI actually kind of tanked quite a bit. And then people bought the dip, though, pretty quickly. All right. PLTR was actually ripping. So in terms of PLTR too, so PLTR remains in a strong upward trend channel. It kind of fell out, just pushed back into that trend channel, but now we have a double top on PLTR. And then Jim Cramer said, "Oh, $100 here." Now before I was like, "Oh, this looks kind of decent," but now like Jim Cramer, oh man, you know the Cramer effect. But yeah, so PLTR did have its highest close ever. Up there at $80.55. It has gone higher than that, at about $80.60, but it opened there on a gap up and sold off immediately. So the fact that it's closing there on a nice daily bull bar looks pretty good. But the only thing is like, hey, now we have a double top, so we have to watch this $70 neckline that could cause the stock to tank. So just kind of be careful there. But PLTR does look pretty good still. So. Just keep in mind that it is a double top. Watch that $80 psychological level. And Jim Cramer is calling for 100. I don't know. All right. And then I'll look ahead. So earnings. So no significant earnings will be had until about January 7th, 2025. where we're going to kind of restart earnings season, and the week after we're going to have big banks start to report earnings. And in terms of economic data for the next week, so Thursday is pretty much going to be the only day that's like pretty big. So Thursday is going to be initial jobless claims at 8:30 before market opens. We do have like consumer confidence on Monday. It doesn't really do anything. Durable goods, all that good stuff, new home sales, doesn't really do much in terms of the market. So keep in mind that Fed Powell is looking at jobless claims and he's looking at PCE. So those are the days that the market's going to go freaking crazy. There's going to be a lot of volatility. And then in terms of the watch list, we have Tesla, IWM, PLTR, SPY, Sound, CVNA. And then in terms of quantum, these are some quantum stocks that you might want to think about picking up. They're very volatile, very, very volatile, and but they can be very lucrative, especially with this whole tech craze. Okay, so that is pretty much it for today. Hopefully you guys like this. I know some people wanted me to post this every week because you're getting a lot from it. So hopefully this helps and setting you up for the week. Let's keep winning.